Jim O'Neill, one of the most influential economic voices of our time, and he's the man who coined BRIC and changed how the world views emerging market powerhouses. Former chairman of Goldman Sachs Asset Management and commercial secretary to the UK Treasury, his insights have shaped global policy, investment strategy and geopolitical thinking for over 2 decades now. Today, he continues to be a leading authority on China, on India, global growth, and of course, the forces rewriting the world economy. Jim, it's a real pleasure to have you today on ET Now, and welcome to the FII View.
Thank you very much. It's a great honor to be with you.
Right. Jim, you coined BRICS 2 decades ago. Looking at today's geopolitical fragmentation, do you believe the BRICS concept has evolved as you originally imagined, or has it sort of drifted from its economic foundation?
Bits of both, but probably more the former, primarily because of the importance of China and India. Actually, next year will be the 25th anniversary of when I created the idea. And if I look at where China and India sit today, despite their own ongoing challenges, it's pretty much in line broadly with the sort of outline that myself and my colleagues suggested, linked to the sort of 2050 idea of where both places would be. And as I'm sure you discuss often on your show, India is poised to become the 3rd largest economy in the world, and China is very well established as being the 2nd largest. The no is for 2 reasons. One is because Russia and Brazil, of course, have been, especially in the 2nd decade, quite disappointing. And then more broadly, and maybe we get into it more, the expansion of the BRICS politically into the BRICS Plus has a very sort of strange set of countries that have joined it to make it 10. And it's not clear to me what they are really trying to achieve as an alliance. But if I put it all together, the very fact they've done that and the complications that the old Western nations like mine and America and Europe are having in trying to deal with such powerful countries that don't necessarily have the same wealth or for all their citizens or sort of political systems in some cases, makes it a very analytically interesting but complex world. And next year, I think I'll be writing and participating in a lot of events as to how the world can be better with its complex environment we all have to navigate.
Jim, do you see China and India, recalibrating the entire economic order in that sense, because from a currency point of view and from a global economic point of view as well?
Well, I think this is, as the rest of this decade progresses, and its relevance since the visit of Modi to Beijing, of course, how China and India together try to get closer, if they do, I would say is amongst the top 3, if not the single most important thing in the world, because, of course, China and India have had immense strategic security and diplomatic rivalry for so long. But if however difficult it would be, if they are now choosing to put those things aside and try to cooperate deeply on international trade and investment matters, as well as things like climate change and many others, it would be transformational, certainly for the whole of Asia, and because of the importance of them both, transformational for the world. And that is something which I am watching, and I suggest other people do really closely, because it would attach so much more importance to the BRICS political grouping if China and India had a more cooperative basis. But if they didn't, then the BRICS group will effectively be largely symbolic. And yes, they will all make lots of noises about various topics, but it will be a little bit empty unless there's more substance, especially between the biggest members.
Point taken. But Jim, other than diplomacy, what key reforms do you think India must undertake to truly leverage its demographic advantage over, say, the next decade?
Yes, it's very good question and interesting issue. You know, I read some interesting longer-term reflections on what the Indian leadership wants to do by the time of the 100th year anniversary of India's full independence, and effectively to become a middle-income country. And if you translate into the kind of economic growth that's needed, that requires India to grow by 8% the next 2 decades. And its demographics are so powerful still. In theory, that should be relatively easy for India. And of course, that is what China did for 30 years until about 5 years ago. And in order to unleash that, India has to be more successful on about 3 or 4 areas, I would say. One is somehow allowing or encouraging India's labour force participation to be more structured, and therefore to be a bigger and more sustained player in aspects of the modern, sophisticated manufacturing chain that links the world. Secondly, and as part of that, India has to still make a lot of progress on the challenges of having a vastly improved productivity sector in agriculture, which of course is such a dominant part of Indian society still. And then thirdly, linked to gains of both, it has to somehow manage to improve the basic primary and secondary education for so many Indian people that get left behind and don't really benefit from what has been so far in a challenged world environment, a glorious decade so far for India. But a lot of Indian people haven't benefited from it. And then the very last thing is as with China and other big emerging nations, India has to be more proactive on the fight against infectious diseases, including something I've become very involved in the past decade or longer, antimicrobial or antibiotic resistance. But India could do all of these things. It just needs continued determination and strong leadership and open-minded thinking from the leaders and the advisors of India today.
Jim, if you look at global economy as a whole or global country, many countries, they're now focusing more on domestic rather than being, a trade-oriented free market economy. Do you think, given these factors, what role does tariff, play for countries like India, and how India will be able to meet the targets that we have set out for the 100th anniversary?
So I think about this in a sort of a bit more open-minded or non-static way, let's call it. Very interesting coincidence as we turn this year. The United States under Donald Trump, quite amusingly in a way, has just inherited the rotating year of chairing the G20. And I participated on a call with the Chicago School for International Affairs last week, where I've become a visiting fellow. And I suggested that a way to try to encourage Trump and his advisors to get away from this obsession of tariffs is to resurrect something that a previous US Treasury Secretary under Obama tried and became very close to achieving in the early part of the last decade in 2011-12. And that was to introduce some kind of monitoring zone for the balance of payments current accounts for really important big systematic countries like the US, like China, like Europe, and so on, and present this to Trump as a way of being more constructive way to actually helping international trade imbalances than this very, very blunt and narrow focus on tariffs, which, to be honest, the latest data make it pretty clear that they're not working. We're having this discussion on the day the latest Chinese trade figures have been produced, and yes, Chinese exports to the US have gone down, but Chinese exports to so many other places, in particular Southeast Asia and so-called the global South, are booming. And many of those countries' exports to the United States are also rising sharply. So, in essence, we're having a lot of trade that's just being diverted to different places. And the way to really deal with big trade imbalances is to have more balanced rates of domestic demand growth in countries that really matter for the world. And hopefully, some more imaginative thinking can be undertaken and guide Trump away from this. And the key thing being is, of course, is already being evident. Trump is already backing off some of these tariffs because he's starting to see in his opinion poll ratings that is hurting his core support because of the price increases. So I kind of think about it a bit differently than many other people. One other thing I should obviously point out, India, of course, is such a resilient economy, and ironically, even though it has to do better on trade, because it's so domestically demand-driven, it isn't quite as vulnerable as a lot of other, especially smaller, very open economies to this kind of Trump-led world of tariffs matter and the US becoming more domestically orientated. But I don't really believe it's very sustainable.
Jim, I also want to talk about, how the foreign institutional investors have been looking at India, because just in the calendar year so far, we've had outflows of about $25 billion. Of course, a lot of it is also because of how the Indian currency has performed vis-a-vis the dollar. But what will it take for the FIIs to come back to India, you think?
I was thinking about this in advance of our call, and I remember from the call we had probably this time a year ago, looking at the year ahead. And what is fascinating, I think the mood amongst international investors has changed a bit for the first time in many years, particularly on let's call it a tactical basis, China versus India. This time a year ago, the mood about China was so bad that investors outside of China were thinking, we're never going to invest in China again. And of course, people thought India was the greatest place to ever invest and it's always going to do great. And what's happened is, of course, China has come up with some interesting initiatives, including some amazing innovations in AI, which has led to a completely different mindset from investors. So a lot of people are putting more money into China than they would have dreamt of a year ago, and therefore less elsewhere. And I think India's dilemma in that sense is the growth story is very well known. There is no real, as of yet, linking to what we talked about reforms, new theme to attract marginal excitement about India, and so the attention has gone away. But I think that's quite healthy. Again, I remember debating it when I was on a visit to Delhi about this time a year ago. I was a bit bothered and skeptical about this sort of very, I'd call it lazy view internationally that the Indian market was just going to carry on rising absolutely and relatively forever. And of course, that hasn't been the case because it's not realistic. But I think it's not a bad thing that there's been a calming down of some international flows. And it certainly means that if some of the reforms we touched on start to happen and people believe that India can not only just grow close to 8% as it's doing at the moment for a year, but it can actually do it for 20 years, then investors will be back in a vengeance and be once again very excited about putting money into India.
Interesting. I remember that conversation from last year in Delhi at the India Economic Conclave. But
Yeah.
Jim, two questions from what you just talked about. A, is the China story still bottom up, or is structurally money now moving into China as opposed to being tactical about a year back? And B, India is supposed to be, looked at right now as the anti-AI trade. When is it that do you think the AI trade, which is currently ongoing pretty much across the globe, is that going to reverse in 2026?
Wow. My easiest answer to your second question is I wish somebody could tell me the definite answer because I don't know, but I'll come back to it. On the first one, I think the way you asked the question describes it beautifully about China. I think there's a lot of bottoms-up excitement, and actually it links to the second one. It's because of AI. Just as I was waiting to come online with you, I've read yet another fascinating article about the amazing advances going on in AI in China, and I think it's shocking a lot of previously narrow-minded American AI specialists and thinkers that, in fact, America hasn't got the scale of global domination in AI as they once thought. And you could say the same thing, of course, about alternative energies and electric cars. And if you really look at these things, despite all the problems in the Chinese housing sector, and despite the weakness of consumption, China is in the forefront of all these miraculous things that are important, that we all think are important to the rest of the world. What I think is now interesting, and again, I've read something else about this in the past 2 hours, the Chinese authorities appear to be getting ready to try to use fiscal policy to boost their own consumer more. And if that happens and it's seen as credible and successful, then I think you're going to get another layer of optimism from what I'd call is more top-down and macro investors, at least in the next few weeks and the early part of 2026. As for the second question, and of course this very intriguing issue about India and its sort of its domestic strengths and its absence from being on the forefront of these major global cutting-edge things. And at the end of the day, I think it's a core. It sounds contradictory, but in a way, it's a bit of a core strength, because it means India doesn't get too caught up in what might be fads and bubbles. And so, in that sense, it gives India a bit more stability, because if the worst goes wrong, and we find out that, the MAGA 7 have massively overinvested, and I'm not sure about that. There is some things I look at suggest they have, and there's others I look at that suggest they haven't. But, again, that's the problem with finance and the excitement of finance and markets. We never know until afterwards. But if it turns out that they have, then there are going to be some pretty colossal negative financial market consequences. But India wouldn't suffer so much. And I think it also, as I'm saying, it takes me right back to the early part of the conversation. India should concentrate on the pretty well-known areas it needs to reform to really boost the structural growth trend and the ability for more Indian citizens to share in the growing wealth of the country. And if that happens, India can sail through all these volatile but exciting and at other times worrying things around the rest of the world.
Yeah, absolutely. So gold or equities, the one asset class for 2026 that you're betting on?
Oh, dear. Oh, gosh. I'm not personally really betting on either. But if that were my only choice, it's very hard. I would bet more selectively on non-US equities. The fact that the real takeaway for me of this year, and we have of course got 3 weeks left, is that previously very, very unpopular equity markets, China and Europe, have done as well as the United States, and in some instances better. And I think that might be the beginning of a multi-year theme. And I thought that before it started happening. In fact, again, I might have even said that when I was in Delhi with you guys. But I think there's more legs of that to go. But I can understand the gold price rally, but I think there is so much speculative money in it. I personally think it's time to be a bit careful.
Within BRICS, which country would be giving you the best returns in 2026?
I'm sorry, ask again?
Within BRICS, between Brazil, Russia, India and China, which country would be giving you the best returns in 2026?
So I'm not, it's a really interesting question. I haven't thought about that. But, My core belief is I think the Chinese equity market is going to continue to do quite well. And so that would be my strongest answer. And I think the RMB is going to continue to appreciate, contrary to the views of many analysts. But I quickly add, I could see the case for all BRICS, the main BRIC equity markets doing better. Obviously, we're having this conversation at a time where Trump is trying to force the Europeans to do a deal about Ukraine. And if they did, it's quite clear one of the motives of Trump is to sort of help Russia's economy, and actually, in the strange way he thinks, for Russia to become a bigger ally. And if that happened, then if we get a solution to it, both Russia and Ukraine assets and European assets would do really well. But I think that might mean a better environment, at least cyclically, for Russia as well. And then I quickly, we talked about it for India. India could easily come back roaring, given this shift in pattern that we've had in recent months with foreign investors. But I don't dismiss the fact that Brazil can have a really good year either. If you're looking at background of the Fed easing and a more what seems to be by Brazil's standards a slightly more stable Brazil, it could be a very, very good year again for especially fixed income investment into the Brazilian real.
Oh yeah, Brazil already has done quite well year to date. But Jim, lastly, if you were to redefine the BRICS or propose a new economic grouping today based on future potential rather than size, which countries would you pick?
I mean, I'd stick with the same thing. I'll leave you with this thought, and interested in as we go through the next weeks and early part of next year from your own reactions to it and some of your viewers. Because it's the 25th year, I'm getting a lot of people asking me to, think about many deep issues. And one of the things that I'm thinking about is some kind of need for, let's call it a new platform of thinking about what I call BRICS plus countries, in which the purpose would be to try to help them think more strategically about what they can genuinely achieve together for the betterment of themselves and the rest of the world. I think just as importantly, if not more, how the G7 countries and the old developed world can sort of somehow get out of this growing belief of some kind of adversarial thing between these two blocks, because that's not going to help anybody. And so that's not what you asked me, but that's the way my mind's thinking. If I thought about the specific countries, the BRIC countries are the ones that really matter, with one obvious exception. And interestingly, the latest country to become a formal part of BRICS Plus is Indonesia. And Indonesia probably has the biggest justification out of any other emerging country for not being included in the BRICS in the first place, because of its own amazing population dynamics, and the fact that by and large, and it's quite miraculous in a way how they've done it, Indonesia has not had any major financial or economic crisis now since 1997. And that's quite an achievement given all the challenges that have been going on, hitting every part of the world ever since.
Interesting times we live in. But Jim, thank you so much for your time today, and here's wishing you holiday greetings already. Thank you so much for speaking with us today.
You're welcome. Thank you very much for having me on. It's been a great pleasure.
Morning, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. And first of all, wishing all of our viewers a very, very happy New Year, and wish Srishti a very happy New Year to you as well.
Happy New Year to you, Kanishka, as well.
Absolutely. So let's get started. And firstly, tell me, what are the New Year resolutions that you have come up with this time?
Yeah, that's quite a difficult question, Kanishka, but I think that I'll eat healthy and read a lot. This is something that I've planned for 2026. What about you?
I tried to reach on time to every place. So that's my New Year resolution. And of course, for our viewers, wishing them a very happy investing in 2026. But let's move on and tell you how the world celebrated, the coming of 2026. And as the world steps into 2026, celebrations did roll across time zones. Kiribati was the first to welcome the new year, kicking off global festivities. As always, Australia and New Zealand followed, with the world-famous Sydney Opera House lighting up the skies with spectacular fireworks. Tokyo and Seoul followed with breakthrough displays, breathtaking displays, but as expected, the showstopper was Dubai's iconic Burj Khalifa fireworks extravaganza. Beijing, Hong Kong, Singapore, Bangkok and Kuala Lumpur, all of them joined in with the vibrant and lively celebrations, ushering in 2026 with color, music and joy. India also welcomed 2026 in very different ways across regions. Delhi rang in the new year under dense fog and biting cold and recording its coldest December day since 2020, while Mumbai woke up to rain on the first day of the year. In Goa, there were fireworks that lit up the skies as revelers packed beaches and parties. In Kashmir, fresh snowfall drew tourists to Gulmarg and Pahalgam, with celebrations also held near Lal Chowk in Srinagar. Well, here's wishing everyone a very happy new year.
Indeed, Happy New Year to all our viewers as well, because yes, expecting 2026 to be more interesting as well as definitely more exciting for the markets as well. All right, with this, wishing our all ET Now viewers a very happy new year as well, and expecting 2026 to be more exciting for the markets as well, and hoping for good returns coming in for the Nifty. But as we head into the new year, which are the stocks to keep on your radar for maximum returns and the stocks to avoid the losses? Firstly, onto the show, let's get that list to get us prepped up for 2026. And my colleague Ravinder is here with what the analysts are recommending. Ravinder.
Well, as in the year 2025, Nifty has delivered a return of around 9.5% so far. And if we look at some of the top stocks from the index, where analysts are expecting a high return, and over the next 12 months, expected return from the Nifty 50 index shows eternal leading a projected return of around 33.5% in next 12 months, which is followed by Adani Enterprise, Trend, NTPC, and ICICI Bank. And ICICI Bank expected return in the next 12 months is more than approximately 26%. And on the downside, Wipro is expected to be biggest laggard with return of 2.2%, which is followed by Hindalco, Tech Mahindra, Shriram Finance and Eicher Motor is expected to remain largely flat with a marginal return of 0.1%. And now shifting focus from Nifty 50 index to Nifty Bank index. In Nifty Bank index has outperformed the Nifty 50 index in 2025 with a return of more than 16% in 2025. And from the Nifty Bank index, the top gainers is expected return is from the ICICI Bank, where analysts is expecting a return of more than 25% in next 12 months, which is followed by HDFC Bank, ICICI Bank and Kotak Mahindra Bank and SBI, where SBI analysts are expecting a return of 10.5% from the State Bank of India. And from the laggard side, the IndusInd Bank is expected to decline by more than 10% in the next 12 months, and AU Small Finance Bank by 8.5%, and Federal Bank by more than around 5.5%, and while Canara Bank is expected to deliver a modest return of 1.6% in next 12 months. Now, if we talk about from the broader indices space, then the Nifty Mid Cap Index, the top expected return from the is Kalyan Jewellers, where the analysts are expecting a return of 41% in next 12 months, which is followed by Suzlon Energy at 40%, Hutco at approximately 40%, Tube Investment of India at approximately 38%, and followed by IRB Infrastructure. And on the weaker side, Vodafone Idea is expected to fall by approximately 26% in next 12 months, which is followed by RVNL by approximately 16%, and which followed by Yes Bank, BHEL, and Tata Elxsi. And lastly, we talk about from the Nifty Small Cap space. Then Nifty Small Cap Index has underperformed the Nifty 50 and other broader indices, with down around 7.5% in the 2025 so far. And Nifty Small Cap Index, AB Real Estate is projected to lead with the more than 53% return over the next year, which is followed by Whirlpool of India at approximately 50%. And in the year 2025, Whirlpool India was down approximately 50%. Now analysts are expecting around 50 to 51% return in next 12 months, which is followed by Welspun Corp at 50%, Jindal Saw and NCC. And meanwhile, Laurus Lab is expected to decline 12.5% from the small cap space. Anand Rathi held by 10.4% and Manappuram Finance by 4.9% and MCX by 2%.
All right, thank you, Ravinder, for that. Well, let's hope for maximum returns in 2026. But before we get started, in a year that was defined by turbulence, transformation, and tectonic shifts in the global economy, N. Chandrasekaran, the chairman of Tata Sons, struck a note of confidence and clarity as he reflected on 2025 and laid out his vision for 2026. Now, he's described 2025 as a year of extreme market volatility, yet one that reaffirmed the resilience of global growth. Chandrasekaran expressed strong conviction in India's growth story, stating that the country is firmly on track to become the world's third largest economy. Looking ahead, he said that global uncertainty is not a headwind, but a long-term opportunity for the Tata Group, which is scaling up investments in precision manufacturing, semiconductors, and global gigafactories as well. He also added that the Indian manufacturing ecosystem that's entering a golden age of advanced AI-first factories, trusting that AI, data and applications, all of these must be built together, not in silos. But Chandrasekaran has also underlined that cyber securities and business resilience, some are of the critical factors that we must keep in mind for growth ambitions, while sustainability and growth, they're also progressing in hand across Tata businesses. He concluded by emphasizing that strong execution creates stability in uncertain times and that teamwork and collaboration consistently outperform individual brilliance.
All right, so that's the message coming in from Tata Sons chairman. It's just a few more hours that definitely that we have stepped already into this particular new year, and we have curated a tentative list of the events that the world will watch out for in the first half of this particular calendar year. Let me take it across to Ashesha, who is here with more details.
Srishti, good morning and wish you a very happy and a prosperous new year. But let's get started and let's talk about the key events that you need to watch out for as we step into calendar year 2026. First up, the third quarter earnings season will kick start on the 10th of January with IT majors first set to report their numbers. And remember, the street is building in high expectations from third quarter earnings season this time around. BMC elections, Mumbai civic polls on the 15th of January. So that will be another event to watch out for. But other than that, the World Economic Forum will be held in Davos, Switzerland from the 19th to the 23rd of January. And remember, global and world leaders will be speaking at the World Economic Forum. So any kind of commentary on growth, on inflation, on outlook going forward will be very crucial that we will be getting from the World Economic Forum in Davos. On the 1st of February, we will have the most important event of the year, which will be the union budget, and any kind of relaxation on tax further will be crucial, and any kind of reforms in long-term capital gain tax or short-term capital gain tax will also be very crucial. The first monetary policy meeting for calendar year 2026 will be held in the month of February from the 4th to the 6th. The outcome is expected on the 6th of February. RBI Governor Sanjay Malhotra's commentary on inflation, on growth, on outlook will be very crucial from this particular monetary policy meeting, which will be held in the month of February. Shifting focus to all cricket lovers then, ICC Men's T20 World Cup will begin in February. It will go on till March and April. So yes, keep an eye out on this event as well. Shifting focus to some other important comments then, we have key state elections, West Bengal, Assam and Kerala. The dates of course are not out yet. It will be conducted somewhere in April, the outcome of which is expected in the month of May or June. So yes, state elections will be another important event that you need to watch out for in calendar year 2026. Fourth quarter and FY26 earnings season will begin in the month of April, which also means we will have AGMs and annual report which will start coming in. So management commentary from those sources will also be crucial to determine the growth trajectory going forward. RBI monetary policy after February will yet again be in the month of April. Commentary on monetary easing from RBI governor will be very crucial. Shifting focus to the month of May then, where state election outcome, as I mentioned, West Bengal, Assam and Kerala. The polling is set to happen in April. The outcome is expected in the month of May. So this will be another political event that you need to watch out for. Peak earning season for the fourth quarter will be in the month of May, which will of course have a big impact on the markets, especially because that will be the year ending quarter, and the outlook from the management commentaries for FY26 will also be very crucial. Then of course we will have the monsoon season, so tracking southwest monsoon will be very crucial in the month of May. Shifting focus to some other events then, and in the month of June again RBI monetary policy meeting. Other than that, progress of monsoon in the month of June and its impact on sowing and agricultural products will also be very important. G7 summit in France in the month of June, keep an eye out on that global event where world leaders will be meeting and discussing growth. FIFA World Cup 2026, another important event, sports event that you need to watch out for in the month of June. Shifting focus to July then, first quarter FY27 earnings season, and we also have a global event lined up in July, and that is the NATO summit that is set to happen in the month of July. So yes, a whole host of events that you need to keep an eye out on in the first half of calendar year 2026.
All right, thank you so much, Ashisha, for that.
Welcome back to Market Cafe right here on ET Now, and let's now tell you what is the global setup looking like, because yes, for today most of the global markets are shut, but just yesterday, which was the last trading day for the US markets as well, there was a weakness indeed that we have seen all across the board, wherein the Dow Jones has actually declined in yesterday's trading session, and so was S&P 500 as well as Nasdaq, which seemed to be declining with almost 0.8%. Even Russell 2000, that's the broader market index, was also down almost 0.5%. There was selling pressure on the last trading day that we have already seen, but yes, the commodity markets have been taking a little lighter with respect to the trading volumes, but it was the fourth straight day that we have already seen that particular decline coming in. But yes, the action has always been into the commodity market in the past couple of weeks, where we have seen that gold did decline a bit, but it was silver that was down almost 7 to 8%. So all in all, just talking about yesterday, yes, it was a day that marked a weakness, but particularly if we look at the US markets and their return in 2025, they have given a return of anywhere between 13 to 21% as well. Kanishka.
Absolutely, Srishti. Now, speaking of the US markets, we have seen, if we talk about the whole year, the S&P 500 that did manage to finish the year up about 16%, notching its third consecutive double-digit annual gain. Nasdaq surged more than 20%, and the Dow, that rose nearly 13%. So that's about the US market. But let's also talk about some of the Asian markets. Well, most of them are closed for New Year's Day. But let's tell you what's happening as far as Hong Kong's Hang Seng is concerned. Well, it's a rather negative day, negative start coming in for Hong Kong's Hang Seng Index. It's trading about 0.8% lower, 25,630. That is where the index is at. Apart from that, let's also see how ASX 200 is doing on the Australian front. Well, absolutely flat day of trade. Looks like the markets are also in a slightly, holiday mode. Looks like that. Very flattish moves, just down about 0.03%. 8,700, that's where the index is at. So yes, very muted day of trade coming in for the Asia Pacific markets. But let's also talk about India. Now, we ended, the Nifty ended at 26,129 yesterday. A stellar recovery that we saw in the markets, just before we ended 2025. And today also we are expecting a start in the positive, shade. A greenish shade is what we are expecting at the start. Just uptick of about 45 points. So yes, Srishti, mildly positive start, but yes, of course, in the green on the new year.
All right, let's watch out for that, because just yesterday, that was the last trading day of 2025, did mark a very strong move on Nifty as well as Nifty Bank. But for today, which are the stocks that you should be watching out for? Let's get that list ready for you. And Ravinder is standing by with some counters that you should be watching out for. Ravinder, good morning. Take it away.
Well, yes, good morning, Srishti. Firstly, let's start with Zegal Prepaid Ocean Service can be in focus on the back of their agreement when company has signed a 7-year agreement with Visa to promote co-branded domestic prepaid cards. So back of this, Zegal can be in focus. Apart from this, keep an eye on Glottis and all-time plastics. These both stocks can be in action in today, sir, because the company's login period, IPO login period will end today. And for Glottis, it will be 2%, and all-time plastic, it will be 6%. Great Eastern Shipping can be in focus, where company has contracted to buy a second-hand medium-range tanker of about 51,565 DWT, and the 2013 South Korea built vessel is expected to join the company's fleet in the Q4 FY26, and the proposed vessel will be financed entirely from the internal accruals, and the purpose of the acquisition is the expansion of the fleet. So back of this, these stocks can be in focus. NCC can be in focus, where company has received 4 order worth of rupees 1,237 crore in the December month, and out of this approximately 705 crore pertains to be building divisions, while 532 crore relates to the transportation division. And lastly, Times Technoplast can be in focus, where a company has been awarded a contract from the HPCL valued at approximately 51 crore for the supply of rigid packaging product in the size ranging from 7.5 liters to 20 liters. So back of this, Time Technoplast can be in focus.
All right, thanks, Ravinder, for that list. But that's not all. Several other counters that we'll be watching out in trade today. Let's start with NBCC. Big order win here. They've cracked a deal worth 220 crore rupees. So that's something that we'll be watching out for. Other than that, from the chemicals pack, we also have Navin Fluorine. Now, they've commenced phase 1, commercial production of the phase 1 of CGMP4 plant at Davis. So yes, that's also something we'll be watching out for. Apart from that, we have VIP Industries, which is going to be in focus because they've signed an agreement, a binding agreement for assignment of non-core leased assets. So yet another counter to track today. Apart from that, there is Space Digitech, a big order win coming here as well. They've got an advance purchase deal worth 95 crore rupees from BSNL. So yes, that's also one stock to watch out for. Apart from that, lastly, we have Privy Specialty. Now, there's been a block deal here. SBI Mutual Fund has bought about 22 lakh shares that was sold by the promoter. So that's the latest on Privy Specialty. But yes, all of these counters is what we'll be watching out in trade today.
All right, but with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team who put the show together. Thank you so much for tuning in.